All right, morning. Today is Christmas Eve, December 24th. I'm doing a recap for, I believe it was yesterday's price action. Um, I believe it's yesterday. I don't even remember. I've lost count of the days. But anyway, in any case, um, no, it's not yesterday. It was the 22nd. But we're just going to do a bar by bar recap um, on pretty much how the day went and how I traded it. Um, I haven't been doing a lot of recaps recently, because I've just not really figured out whether this actually is useful. And I just realized that, hang on, maybe I can do this also for my own benefit, um, but in a way that I think is also useful for other people as well. Um, Obviously, this is based on what I understand. I may be wrong in when I come later to review this. And the reason why I'm saying this is I started looking back at some of my older recaps, and I noticed that, excuse me, I noticed that I've said a lot of things that I thought was correct was actually not correct, which is great because that means that, we're growing. Um, so um, I one day will go through some of the videos that I've done recaps for, or at least given some thoughts on the day, and correct some of the things that I said, because you know a lot of it is all down to bad knowledge. And I think what I'm now learning based on that is that um, you have to be open to the fact that what you're saying at the time or what you're seeing at the time is only just a reflection of how you've come to understand the market at that time. But as time goes on, you start to realize that actually some of it is BS, and you realize later on from experience that things get better. Anyway, let's get straight into it. All right, so it was a trading range day. Um, and in fact, I marked out on my daily recap that it looked like a trending trading range, um, but it was. Let me see, I can do this without, because I set up the screen in a way that I realized that, this may not actually work out. I actually did not think I'll pull up a PowerPoint, but I'm going to see how we can do this with a PowerPoint. So, uh, from current slide. Okay, wrong screen. Okay, so let's do this. It might not work. I was gonna do this. Okay, it is showing. I think there's some stuff missing here because I have a thing here. But what this says here is late test of open. Um, it doesn't really matter. Do you know what? Let's just do it this way. Yeah, let's just do it this way. So that way, that's better. All right. So, yeah, if you notice, I marked a range here and another range over here, but I don't think this is relevant. But we'll come back to this every so often. All right, so let's go back to the bar by bar. Coming into the day, starting because it was a Friday, we'll start with a weekly. Oh, I wish I took a screenshot of this before this bar had printed, because this, if I remember correctly, we were slightly below. Actually, we opened here on this week, but at the time when the day was opening, at least overnight, because this is the electronic trading hours chart, I think this open was slightly higher. Let me actually have a quick look at the Globex. So the Globex high was close to the opening price. Okay, yeah, so it's close to. And where did we close? We closed here. All right, so it was this high here was slightly higher. This has always stayed here. We've not actually come to revisit. We've not actually tested this level. This bar has kind of stayed around this high, which actually is quite interesting because it means that there's a lot more buying pressure. If you think about it, apart from the time when we sold off here, there's been a lot of buying pressure, and then we had this pullback, and then two legs up, one pullback, and then we opened here. You can see we've kind of been in a small pullback bull trend up here. Well, the small pullback trend started here, went into a training range here, We had a breakout here, and then we had the FOMC report, had a climax, and of course, climaxes always lead to trading ranges. So we had 2 days of a trading range, and it was actually a triangle. So you can see triangle. Triangles lead to breakout mode. So therefore, we're going up, possibly for a measured move the size of the triangle. Okay, we didn't actually get to the measured move. So probably we'll get to the measured move all the way up here, possibly. I mean, doesn't mean we're going to, but generally triangles tend to be final flags. And this price here is an agreement price. So whenever we break out, we know we're going to come back to it later, which is what happened over here. So when we sold off here, I remember saying to my colleagues, we have a triangle and we're selling off, we're probably going to get here. So it's probably safe to stay short till we get to the apex. So I marked it here with this dotted line over here. And when I was short, I was targeting here. But we actually went beyond that. This is so strongly down, we should get a second leg. And on this particular day, I was looking for shorts. I was hoping we would test this low, and we didn't. We had a higher low, major trend reversal, and went up. So chances are we're going to try and get all the way up to this high, because prices can't get down to this low. So you know how it is. In fact, that's actually a key learning point. Let me use a whiteboard to explain this. Right, so, I mean, again, I don't know. This is just me explaining stuff for myself for my own benefit. So, price is obviously probing support and resistance. Test support, test resistance. Sometimes it tests it twice, comes back to support, tests it twice, goes back, maybe test this level. If it can't break it, test it again, and it'll probably break this low. And the psychology behind that makes sense, right? Based on the fact that if, say for instance, we do this, test that, do that, test that, do this, test that, do that, test that, do this, test that, and we start to do that, and we start to form these triangles, at some point it breaks out. And if you think about the idea behind that, it's really at some point, it gets to a point where, if you think about it, if you're a seller, and your risk is probably going to be all the way up here, right? And the market is doing this, and your reward is this. So maybe this might be 1, this might be 2. To most sellers, that's probably not great. This is just a scalp, and the probability is not great. So no one's going to be interested in selling here. And possibly for a buyer as well, maybe it's the same thing. You might have 2. But at some point, you get the breakout. And we get lots of these triangles. Like here, we have a triangle here. We even had one here again yesterday. And, I mean, let me just mark it. We had a triangle here, if you want to call that, there as well. And of course, the price is trying to test the apex, but that's another story for another time we'll talk about later. I need to get into this recap. But anyway, so yeah, we did that, and I thought we were going to come back, and then we had one leg up. We couldn't get to test support here, and so therefore we're probably going to test resistance all the way up here, and probably even test here. So there is a chance that opening here after this big run, we're going to test up here. Initially, I thought this was the first leg pullback, second leg, and it looks like this is another pullback. And probably make a third. Probably have attempted to make a third here. Maybe it's failing. I'm forming another triangle, a bigger triangle. But anyway, so let's go into the bar by bar. Oh, and then so we've done the weekly. The daily, coming into the daily, that was the prior day, it closed on its high, so there's a high chance that the next day will be a bull bar. Initially, I thought this might close as a doji on this day, and if it was a doji, then a high chance we'll get a second leg down of this particular day on Friday. But because it closed on our high, and we're coming off, this is a 9 exponential moving average. So, and we've tested it here, we keep testing it and finding value. So chances are we're probably going to try and make a new high if this is support. In trends, you can use moving average as as support or resistance. Essentially, what it is, in my own understanding, is imagine you're looking for somewhere of confluence where everyone's taking trades that everyone can see. The moving average is a great place, and it's a place of value because they're getting discounts. If you think about it, we've been buying at premium all the way up here, Now we're beginning to lose momentum. So a lot of scalping going on over here, a lot of not much buying going on up here. So at some point, the bulls are going to give up. You want to get to a price where there's lots of buying and no one's buying here. So the market is looking for the buyers. And here is a great place. We still have a gap between this high and this low. You could even say this bar and this bar. But this bar, this last bear bar in this whole move, completely engulfed. So the way I understand that is, think about it. If say I mean, it's not a great bar to sell, but say you sold this bar and you're trapped, you sold higher, you got out break even when this bar came here and tested this low. Now this is pushed up. So it's the first pullback, and this pullback went beyond 50%. And that was another thing I was looking at, what the 50% pullback would be. So this is closed above the 50% mark. So this has got a very bullish intent. All right, so that's the daily. Let's look at the hourly. So on the hourly chart, again, similar thing. We have a bear flag forming here. One, two legs up. One, pull back, two. A very strong second leg. Sometimes you could look at that as a trap. So maybe you might get a second leg down. But the great thing about that is, or what you notice as well, is we gapped up. We'll look into that later. But the point is, this is so strong that we'll probably get a second leg up. The bears are not getting very strong bars. This is the only strong bar we got. On the alley, a little triangle over here. So therefore, chances are we're going to test this price and when we pull back. And the reason why is because there's an area of agreement. So if the market can't find any more sellers around here, it's going to test the last area of agreement. And then 15 minute, similar to the 5 minute. We went sideways here for quite a while. We broke out, a very strong breakout, and then we just went sideways again. Had such bad follow through. And you can think about that in the sense that we went sideways for so long. I think this was about, how long was this? Why does it say 19? Am I reading this right? Let me use another tool. We went sideways for 1945. That's not 19 hours and 45. Maybe 19. Can't be right. Maybe I'm reading this wrong. Okay, let's count number of bars. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times 15. That will give you, use my mathematics, 9 times 15. Okay, 135 minutes divided by 60. It's about 2 hours. So we went sideways for about 2 hours here, which is a long time. It's a very big part of the day. So therefore, chances are we're probably going to get a bit of sideways later on in the day because, you know, there is a lot of sideways going on here. So there's a trading range here, so we're probably going to get a trading range, the two ranges. And technically, you could almost argue, yeah, we did. That's exactly what happened. We had a double of the range, close to double actually, because if you include the range low here, we didn't actually get to the bottom of the row low. But you know that there is going to be a second range here, which is what happened, and then we broke out to the upside. So maybe we would test this part of the range, sort of thing. So essentially creating some sort of balance. This was so strongly up, of course, breaking out of this particular range yesterday. So we had a range here, and then another range here, which obviously got tested here. So we have this trading range here, and then we broke out, and it did not just break out, we had a strong intent to go higher. So when you see that, you think, okay, we're probably going over higher. We have a gap between this high, or even this high, and this level, and because it's the trading range, like this whole area is a trading range itself, so we went up, 1, 2, 3. This is just one straight down. Trading ranges tend to fill gaps. So this low is a target, this high is a target. So on the day, did we get, yep, we got to that target. Here we got that at the open. All right, so let's go now to the 5 minute chart, bar by bar. All right, first bar of the day. So the first bar has a 20% chance of being the low or high of the day. But the problem with this bar, as you can see, it's coming at the end, or it looks like a climax, big massive gap up. Also, you have resistance, like resistance here. Let's mark these gaps. You have this low here. I'll probably even mark this low as well because there's a trading range here. And then that bar actually tests this low. So, all right. So bar one, bull bar, strong bull bar, but has a tail at the top. So I don't think I would buy that because of the context as well. We're coming so late up. A small pullback bull trend here. We have a gap. We also have a measuring gap here too. So if we have a measuring gap, we could probably take from here to the middle of the gap around here, just about there. But we've already hit the top of the measuring gap, so that's not relevant. So we can ignore that. All right, let's see what bar two is. Bar two is a strong bull bar, closing on its high. And it looks like it's by the close. However, there is a problem with bar two, with this whole combination, and it's the same problem we had over here. Bar one was a big bull bar, closing on its high. Bar two, two bull bars, one big, and closing on its high. So this looks like by the close. But the problem with bar two is it overlaps bar one by quite a bit. So this is not exactly a bar on top, like say this on this day, where you have this on top of this. There is a lot of overlap. So this is more like a trading range and more like a broad bull channel. Here you have an actual tight channel. And that's the same thing, the same problem we're having here. The overlap is a bit too much. At the time, I wasn't thinking about that until when I saw what happened as we went up, right? But anyway, I bought above bar two because I was like, okay, buy the close. Yes, at the top of the trading range. We're probably going to test these highs somewhere. Let me, I think the risk reward is good. It's okay. If I bought there above one tick and put my stop one tick below, yes, that's the reward. 97, whatever. It's above this high. There's a chance we could get there, but there's some really good targets above that I don't mind just taking the trade for that. Right? So it would just be a scalp, it won't be a swing. So bar three was a really good bar, right? In the sense that we closed on its high. So this is really, really a really, really good combination. A tiny small tail above, so just tiny bit of profit taking, but bulls are still buying. Bar four, doji. So right now we're already beginning to form what we know is a parabolic wedge. Now at this point you're getting the sign that this is looking like this. All right, you know what? I know what I'm gonna do. Let's do this instead. So, no, excuse my French. Properties. All right, so let's make this 50. I think 50 might be too small. Let's increase it to more than 50. Yeah, let's make it more than 50. Let's make it, say, maybe 200 so that this can be interesting. There we go. I know we can see the bar numbers. Probably just take the numbers off. It doesn't distract us. But I just like to leave the reference in there. But anyway, we'll just leave it like this. All right. So anyway, move this to the middle. Whenever you're trading, always move the opening price to the middle of the chart because you get a bias when you see this. You think bearish. You do this. You think bullish. And like this, you are neutral. All right. So anyway, bar two, bar three, we have and then we had bar four. And bar four, as I said, was a doji. So right now, this is what I'm seeing. I'm seeing a wedge forming, right? So I'll just probably plot this like this. At the time, I wasn't thinking like that. At the time, I was thinking, probably break out for a small pullback bull trend later. So let's see how this goes. But then I realized that actually we went up, pullback, went up again, pullback. So what's going to happen with bar five? Doji, right? So we can already, oopsie, we're already getting a test here. It is reasonable to buy four. Would you buy five? No, because it has a tail above, so traders are taking profits. Six, first pullback. Right, so this is the first, and the fact that we have pullback means that now we're out of the breakout stage. We're now in the channel phase. However, this is a double bottom here, so the trading range over here. Bar six is the bar I tend to put my stop below because bar seven because bar 7, the reason why I have this purple dot here is because that's the 10 o'clock report, which is always on bar 7. And we had a few reports coming out, and I thought, do you know what? I don't put it beyond this market to take this as a buy climax and then just sell off as a double top. Because look at where we sold off the last time. We have this big gap here. The chances are we might sell off back to the moving average. So I usually just kind of, and it's not exactly a great sell signal, but it's bar 7. So I usually put my stop just below bar 6. And of course, I'd have been stopped out. I think when I took this trade, I got out at the top here anyway because I think I didn't like the doji. I was disappointed. Bar 7 itself was a doji and it's a pullback. You have a micro wedge, 1, 2, 3. So I expect scalpers to take this long to test this high and possibly test bar 6 high. And that's exactly what they did. They took profits here. Now, it was reasonable to buy above bar 3, right? So if you were disappointed, you would have probably gotten out break even here. Some traders would have bought this bar and waited for this bar to close. So that means they're still trapped. And they want to see what the next bar is. So yeah, because they're saying this is just the first pullback. We need a proper sell. This is not a good sell in the sense that it's a V. You generally don't get like reversals on Vs. You prefer to get a double top. But there are also traders who bought the top of this bar for whatever reason, who are trapped. Bar 9, another doji. So we are forming a tight trading range, right? So the first leg, pullback, second leg, or rather we have 2 legs. So we're probably going to test bar 7's low. So for this, on a lower time frame, this is strong enough to get a second leg down. So I expect to test a bar 7's low. All right, and we're working our way on bar 10, but we're still getting a lot of scalping forming. All right, I think we've now finally tested bar 7's low. And what is there? We're getting buyers. In fact, it looks like a triangle. 1, 2, 3, that's forming. 1, 2, so it's breakout mode. This is the triangle. I like to use the blue lines like that and like that. Okay, so 1 pullback, 2 pullback. So we need to test this high. Okay, and that's exactly what happens. Bar 12. We test that high. And what's interesting about bar 12 is it's exactly around the close of bar 5, which is where you could almost argue the last set of bulls bought, right? Now, I remember saying in the Discord yeah, I was talking to a few colleagues in Discord, and I was like, the next bar or the next few bars are crucial. They need to close above bar 5. If they can't close above bar 5, the bulls are gonna give up. And this is a trading range where the triangle, we broke up outside the triangle and it's failed and it will go the other way. So whenever you have triangles, there's a 50% chance we're going to break out of the triangle and carry on the trend. 50% chance we break out and the breakout fails. So there's 50% chance the breakout will fail, like it's 50-50. Not that those stats mean anything in particular, but I always liked, it's the reason why I don't trade triangles. I just use the stats based on the fact that if I see a breakout, I should expect 50% chance that we're going to fail. All right, so look at bar 13. It's not a great buy, follow through bar on bar 12, and it's not a great buy. So traders who see this are now disappointed. If I was long and I held long from here, I would be looking to exit at this point. And right now we're getting bulls giving up. But some bulls actually bought this low. Maybe some bears scalped to this low because they saw that and they took that as a scalp short. The risk reward is great. If you put a stop here and you sold this bar, your target is somewhere around this low here, and you take profits and you get that. Now let's see what happens. Whenever we're about to break a trading range, we tend to test the middle. So let's see if we get past the 50% point. All right, we get bulls buying that low, buying the close of 14, got halfway, and then now we have a bear bar, a little micro triangle, if you want to call it, between 14 and 16 low, and blah blah blah. But it's not looking good for bulls. Right now we're going sideways, and we're forming too many bars sideways above the moving average. We want to test what's at the moving average. All right, nothing really happens here. We just get a small doji. I think we still have some traders trying to hold this level, and we got a breakout of the triangle and to the trading range. However, we've not broken low of day. That's the next support area. We close below the moving average, and that is really important for the bears. If they can get follow through on this, then it means that we have sellers in the market who are selling below the average price. Well, usually, whenever I see that, I don't think we're going to have a strong bull trend anymore. Because sometimes you might see this as a breakout, a pullback, and a second leg. But this looks very bearish already. They do get follow through, a little gap between the open of this bar. So some people hit the market and they close just at the opening price. So in fact, let's mark the opening price. Market blue. And the opening price is an area of agreement on a range day, usually. Sometimes it's somewhere else, but we mark the opening. And they close above the opening price, but they broke below the opening price. So some bears now have, this is big up, big down. So big up, big down leads to big confusion, which tends to lead to a trading range day. Unless this keeps going down, and they will try and test this. This is the moving average on the 60-minute chart. You can say the 240 MA on the 5-minute or the 20 MA on the 60-minute. And the reason why I marked it, it's the price is oscillating around it. Whenever price is oscillating around a moving average, you're in a trading range. All right, so this could be a target. All right, what do we notice here? We have a wedge. 1 pullback, 2 pullback. Hang on, let's see. 1 pullback. There's a second leg down. Maybe this is an attempt to be a second leg, but I think this is still a triangle. Yeah, and this is 2 legs down, 1 pullback, 2. It's the criteria you need for a trainer. We might get a third leg down, but this is a credible buy because this is the first reversal in a bull trend. We've been over 20 bars above the moving average since we came up here yesterday, right? So bar 69, we've not been below the moving average since then. So usually whenever that happens, there is a chance that the first bull bar that appears below the moving average will be bought. Think of it as a discount, like you're getting a good deal because we've been above it, buying strongly above it for over 20 bars. So chances are they're going to buy this bar. And that's exactly what they do. So this is a great setup, especially being an inside bar. I would have loved it if there was another bar here, because then you have 3 inside bars. It would be a micro triangle, an II pattern, but you can certainly buy this bar. All right, so we have good follow through, although I don't like buying here because this did not close above the moving average. We have good follow through on that bar, and we have 3 bear bars, 3 bull bars closing on their highs. A magnet is this level here. So if you went long, you can always scalp to this level if you wanted to. There's also some sort of congestion over here, so that in itself is also a target. There's a breakout here, so the market may want to close that gap and test this breakout point. So this is another target. And that's exactly what happens here. We test the breakout point when we get over here, and we get some profit taking. But they didn't close below the moving average. So it's the first push, pullback. This could be a 2-legged correction. That's the first leg in the 2-legged correction. And we get a pullback, which is exactly what you expect. And you get a bull bar, but it has a tail above it. When you get 3 bull bars like this, expect a second leg. And we get a second leg. Now it's forming a wedge top. So you can argue 1, 2. Let's see what happens after that. Second pullback. So it's a 2-legged correction right now. Let's see if they get a third push up, but it's at the moving average and you get a bear bar. They don't. Instead, the bears are now selling, disappointing the bulls. So we're going to try and test this low. So it's the first leg pullback, second leg. So if you're selling, this is a credible sell. You can put a stop down here and you could target 19 low. And we're getting really good follow through now. We have 3 bear bars, 2 of which are closed below the moving average. This is sell to close. These 2 should get a second leg down on whatever happens here. Right, we test maybe a breakout point over here. The bulls are trying to get a higher low double bottom. Yeah, they're trying to get a higher low double bottom because they want this to be a high two, and for trend continuation, the bears are taking profits. They want to get a test of the moving average because this leg is so strong, should get a second leg down. Right? The bulls managed to get the push above the moving average. However, it looks like they were met with more selling, and also this looks like they're trying to get back to this bull bar. Thinking of it from this perspective, if say you bought here and you see all this disappointment, you're holding a stop down here, you probably buy this bar and get out break even. So think about it this way: say you bought this close, you're holding your stop there, and you now bought this close, you would get out on this wick here. But right now, the Bears, because they're expecting to get a second leg down, they're probably going to go for a measured. What would the measured move be? Maybe this based on this. So we could go based on here to here. Probably this is the level they're going for. Let's see. All right, so it looks like we're getting a two-legged correction for the Bears because we're getting two legs up. So bulls are still trying to buy, and maybe getting some profit taking. They're buying the low of 30, and we have a micro wedge. So 3 pushes, 1, 2, 3. This is a credible sell. I would target this low on this sell. So sell below 32. But bulls want a higher low double bottom. So if they get a bull bar, they will want to buy that too. Instead, we get a bear bar. So great follow through. And we're forming another wedge. So we have this low, and wherever that low is. But they want to get down to this low. And if anything, I think they're trying to form a bigger, oopsie, they're trying to form a bigger wedge here. We can delete this. So right now, bears are in control, but as you can see, it's still, the bars are small, they're overlapping, it's trading range price action, so lots of scalping, so don't expect this to go all the way down. And then we get a bull bar, right? So some profit taking around this area, possibly another bear bar, and we do. Now the wedge looks like it's complete. 1, 2, 3. Doesn't look like we've gotten down to this low. It looks like the bears might not have hit their targets. If I were bearish here, I would look to get out above this bar, or at least get out because we have a doji. Yes, I would be out by this point, and let me just take this out. At this point, did we get to the measured move? No, we did not. Maybe that wasn't the measured move target that we used. Maybe you could use that one. But anyway, also, yeah, so basically the wedge is complete. They're going to try and break out for the channel here. 1, 2, and 3. It's not a great buy signal because it has a tail above. I wouldn't buy this bar, but I know that now it looks like the 2 legs for the bears are complete. So you got 1 leg, pullback, second leg, and it is forming a triangle now. Imagine this low, this high, this low, this low. You have a triangle, so it's in breakout mode. So the bulls are going to try and break out to the upside. The bears are going to hope that breakout is going to fail, and they want to come to the downside. All right, so we're getting some hesitation. And of course, it makes sense because you're the moving average. It's not exactly the best place to buy. It's also a test of the opening price. As you can see, we tested it here. We're testing it here. And each time we've tested it, they've kept buying it. So that is also a bullish signal that we'll probably go higher. All right, so we get a breakout and a close above this trend line. So this is a credible buy for me. You can buy here, put a stop down here. Sometimes I put it for a scalp, I'll put a stop here because I'm just confident that we're going to at least go for 1-to-1. And I think I did do that. When I did trade, I would probably go here, go for 1-to-1, buy above this, buy 1 tick, put a stop down here and go for target the top of this trading range here. But I think ultimately we're going to try and get all the way back up here. Get good breakout follow through. Okay, now this is interesting. A high double top. That's what the bears see. They want to get a lower high double top. They want to come lower because they want this to be strong enough to get a second leg down. It might be disappointing. Instead, we have a wedge top. 1, 2, 3. Actually, we have 1, 2. No, it's 2 pushes. We have 1 more push coming. We can take this out. Just reduce the lines. So 1, 2. Now, as I see this, I'm expecting as a bull this. But instead, I'm seeing this. This is a warning sign that we may not get to high of day because the move is just not as strong. And it's the second leg after this move. So I am not liking what I'm seeing here, and I'd be cautious. So maybe this leg might stop might stop here. I have too many lines here, so I'm just gonna take this out. We've tested this. I'll keep this on. I'll keep these ones open, and let's make this a bit wider. All right. So yeah, right now I'm seeing that we may not. This might be my target here. We may not get as high. Let's see if I would even get my 1-to-1 on the next push. All right. See what's happening here. 3 bars all overlapping each other. This looks like a final flag. We're getting a lot of hesitation. It's in breakout mode. A tight trading range right now. We're not getting, like, when they bought this bar, it looks like some people got disappointed maybe with this bar and they sold, right? But then there are buyers down here, obviously some bears who sold below this bar got disappointed. They sold this bar and got our break even on here, and that pushes the bar back up. And this is even more interesting. The bars are really overlapping here, so we have lost a lot of momentum. We might not get all the way up here, but let's see what happens if we get a breakout. We attempt to get a breakout. We do get to my 1-to-1 target over here. So I think some traders did the same thing. So this trade would have been a good trade. I didn't trade this part, but looking at that, I would have bought this bar off the moving average and gone for 1-to-1. This would have been a good target. Now we have a double top here, but no sell signal yet. So I'll just mark that double top. Still a small pullback bull trend, but again, let's just take this out so it just doesn't get to it. We should remember we still have this wedge, 1, 2, and I expect this move to be a climax before a reverse, but we're not going. It doesn't look like we're getting all the way up here unless we get a big bar. Now we have a bear bar. At this point, I think it's reasonable to start looking for your exit, because yeah, you've 3 pushes up. You've attempted to get higher. You've not even reached this high, and you're already getting profit taking here. So it's again testing this breakout point. So essentially what I'm seeing here is we have a trading range here, and we can't break back into that range. And we have another range here, and we're failing to break out of this range. So chances are we're probably going to test the bottom of this range again. So what I will do is mark this. It's an okay sell. I prefer to get a double top, but it's not a great sell because of that tail below the bar. But it's a gap below between the moving average and price. All right, so we now have an inside bar. So on a lower time frame, that is a triangle. And we break below it, it looks like a bull flag. So we get 2 legs. Yeah, it was a bull flag. So 1, pullback, 2. So 2 legs down. Some bulls bought this, hoping we would go for a second leg up. And it failed. This is a better sell. 1, 2, 3. I think below this is a good sell. It did attempt to be a good sell. They tried to break out, but it's 50% there's a 50% pullback on this. So essentially, I think what's happened is those bulls are looking at this and going, okay, let's buy 50%, betting that we can disappoint the bears. They did that yesterday, the prior day here, where you got this move and a pullback here. It wasn't exactly 50%, but it was a double bottom here. And then they closed above the moving average. And they kept on disappointing the bears till they got the bears giving up over here, and then we carried on the trend and went for a measured move. But over here, that's they're trying to happen. What they're trying to do. Right now they have a good buy signal, right? So this is one leg, a pullback. They're trying to form a wedge. 1, 2 to form a top up here. This is a micro wedge. 3 pushes down, 1, 2, 3, and an overshoot. So chances they're going to test this high, and they do test that high. So generally, what happens is whenever you get an overshoot of a channel, the price would go to the other side of the channel to see what's there. And if you don't get anyone buying the other side of the channel, then everyone gives up. And it looks like that's what's happening here. We have a very good sell signal. It's worth a good sell. I would take that sell, put a stop above that bar, and go for a scalp. go for 1-to-1. So you could go below here. Oops, did the wrong one. Go below there, and that will be my target. Why? Because I believe now that this move is complete. This is the first leg down pullback, and that's failed, coming down, maybe a triangle. And actually, I think if this has truly failed, this low will be tested. I don't need this anymore because I don't think we're going up there. This low will be tested, and this low will be tested. I mean, this helps because I can see what's happening. Now it looks like the bulls are giving up. When you get a big bar like this, two bear bars closing on their lows, this is sell the close, and they did sell that close without any hesitation. They got a breakout below this channel. All the bulls who were holding onto their longs have given up, and therefore we should see some more follow through, right? So this is how I also read this. This move did not take out this high, couldn't get all the way to this high, so we need to test this low, or at least test this low, right? So this is the first line of defense, then this low, and then we'll now get to the moving average if we can. And look at that. We're now going parabolic. This is a breakout. So the market cycle starts all over again. It could also go for a measured move. If it does, I would probably say the measured move is from here to here for starters. Right? We can take this out. We don't need that. And we don't need that. That would have worked out. Yeah, so that would be a good target. My first target would be this. Even if I didn't sell this, I would sell this, put a stop up here, and I would target this. There's also this as well. That is also a target. This is a target. This is a target. This level is a target. And there's also another measured move from this high to this low. That is a target. So let's see what happens. Right, so we get some profit taking. Sorry, just have to leave very soon. So I'm going to quickly speed this up. All right, so we got a sell here, and then we got a yeah, and then we got a target here, got a target here, got a target here. So let's see what happens next. For me, I would put a stop above this because this looks like a climax and it looks like a wedge. It's tested this low. We will find some buyers. It's the training range day, so there will be buyers over here because they bought this low. The chances are when this bar closes, you will find some buyers, which is what you're getting. And you can see they pushed the price all the way up on 57. Let's see what 58 looks like. 58 is a breakout, so this was strong enough to get some bears to see this as a discount, so they sold this bar instead of buying it. And you can see there's a gap between this open and this, so that means they hit the market when they sold this, and then this went all the way down. You now get some profit taking on the 1 hour time frame, well, not the 1 hour, but you know what I mean, the moving average. So you get some profit taking here because of all those who have been waiting, who've missed all this, are waiting for maybe it's a 50% pullback. Let's see, that is also support 50% from here to here. So this is a target. Right, they test the 50% pullback and you find some buyers. But yeah, still a bull bar, still a bear bar, and we're now forming a wedge bottom. And a wedge in the sense that the price is now oscillating in a tight channel. So I would draw this line here. This is looking climatic. Below this channel here, on a range day, chances are 75% chance we're going to reverse back, test the other side of the channel. So we'll mark the other side of the channel at this point. I don't think we did, but that's what I would do. So we have a channel here, we've overshot the channel to the downside, and 25% chance we'll break to the low, but 75% chance we'll come back up. All right, so we're now losing momentum, but still sell the close. And we test the Globex low. And remember, this is where we reversed. And now we have a doji at the Globex low. It's also a 50% pullback of this move. It's kind of gone below 50%, but this area itself. Bull bar has a tail. This is very difficult because it has a tail on the moving average here. What I mean by it's difficult to buy above this bar or even buy this bar because you might think this is coming down for a next leg down. So I wouldn't even look to buying that. We get a nice breakout, 50% of this at the moving average, but we have a gap between the moving average which is great. Problem is the risk is so high, it's so emotional, very difficult to buy up here because this could still come down for a second leg. Um, I think I did mark a buy on this one. Um, I put a buy here and I put a buy there. I'm not really sure I did, but I personally am not sure if I would. But I think in hindsight it makes sense because you are coming back to the other side of the channel, so maybe it is a good buy. But you need a wide stop. If you buy here, I would prefer to put a stop here. All right. Then you get a breakout. Now the close of this bar is really important. It needs to close above the moving average, which it does. And the reason why that is because I went too far forward. The reason why that is a close above the moving average just indicates that they're buying above the average price, and they keep buying. However, it's beginning to turn parabolic. So chances are this is a wedge, and we're probably not going to go as high as you think it is because we're getting a lot of profit taking. We now get a really strong bull bar. Looks like we may go higher and get a doji. And it looks like the wedge is complete. So that means that we're going to try and get back to 50%, maybe test this price level over here, because that is the first pullback. So I'll mark that here, like that. And if you were going to sell, you need a nice bear bar. That's the first bear bar. The first reversal will probably be minor. They will probably buy that. That's what exactly they did. They're probably trying to test the high of 67. They haven't done it. Now you have an inside. What is that? No, 70 is kind of below that. Okay, it's two-legged correction. One, pullback, two. They're going to try and get back all the way up here. And that's exactly what happens. The two-legged correction is trying to test this high. So now we have a proper double top. The bears would love a bear bar over here. The bulls won't follow through for trend continuation because they have a target the other side of the channel. Now the bears have exactly what they need. They have a double top, a lower high double top, and they have a beautiful sell signal closing below the moving average. So this is a great sell below this bar. And you can see a lot of bears jumped on that. They would now want to get back down here and erase this entire move to form a second leg of that. But of course, there's disappointment because now you have bulls buying about 50%. They don't even get to this. Let's see, do we get 50%? Is that exactly what that is? No, 50% is exactly where this is. But anyway, they don't actually even get close to here. They buy off this moving average, and you have a bull bar closing on its high. So this is very disappointing to bears. A lot of them now are not thinking we're going to get down here. You have a very strong magnet at this time of the day, which is the opening price. It's a range day, the entire day. They've held this price quite a few times, so probably a lot of volume on this price. It doesn't make sense to hold shorts aiming for this because chances are we're going to close around here. So you probably get a few bears giving up. Some are taking profits. Some sold at close and they took profits. So probably what this is a measured move for those who sold this low to those who sold the top of this bull bar, and they're trying to get out around here, and it's gotten out there. However, it's late in the day. It's probably going back into what was happening over here, scalp mode, breakout mode, and we're probably going to go sideways for a bit because no one is. Yeah, it's just one of those times. Christmas time. You don't expect a lot of commitment. You're just going to get to the opening price. Got to the opening price, they sold off, and it was a double top. And it's a great sell signal, so they're probably trying, but it's the last bar of the day. So I don't know. Probably a bull bar next. It's a bear bar. And there we go, and we close there. So based on that, you can already see where, let's go back, where I got a lot of my ideas from. For those of you who follow me on Instagram, you know I post these every day. But this is all I basically have marked, as you can see on that chart as well, to basically indicate where you would see some of these things happening. But all in all, it was a very interesting day. Just reading the bars and seeing what was happening. I think I'll do more of these recaps to kind of give more insight into at least how I've been reading the market recently, how I've been trading it. And yeah, if anyone's interested, I use the Al Brooks method. I mean, not so much method, but his explanation of how these things happen. For me, what was really interesting and key was this area, what happened over here. And then this breakout point over here. I didn't mark it on this particular chart, but whenever you see a breakout here and you get this, we're going to test the breakout point because it's a trading range. So you should always look forward to that. We always do it all the time. Like here, we had a triangle open on 2 days, a day before. We broke out strongly and then we went sideways again, had a third push down. We're going to test this here. So this is a good, well, at the time I wasn't happy with this buy because I've seen this, you see many traps around the moving average. But we had two bars that closed strongly, and then we kind of did not get bare good follow through and an endless pullback. Instead, this showed up and this showed up. I would be tempted to just, not tempted, I would buy this, stop down here, and then just go for at least this price here, or this breakout here, or this bar close here, which is exactly what you have. And here you had two pushes down. You didn't get the follow through you wanted, so chances are we're going for a measured move up. You could go for a measured move for that. All right, that was my recap. I would love to get some feedback. And if anyone thinks that was useful, yeah, please send me a message.